Used car retailer CarMax is among the market's worst performers this year. The stock is down 60% in 2025 as high inflation and strained household budgets forces people to postpone buying a newer vehicle. The average age of an automobile in the U.S. is now the highest ever at almost 13 years. No wonder CarMax is struggling. The good news is that with the help of Elliott Wave analysis, investors could have avoided this year's carnage in the stock. We published this chart more than 2 years ago in April 2023. It proves that the bears gave plenty of warning before showing up in 2025. The daily chart of CarMax revealed that the sell-off between $156 and $52 per share was a 5-wave impulse pattern. We labeled it 1, 2, 3, 4, 5 in wave A in brackets. According to the Elliott Wave theory, a 3-wave correction follows every impulse before the trend can resume. This meant that whatever recovery was about to follow, it was going to be corrective in Wave B and followed by another notable drop in Wave C. With that in mind, we thought that Wave B could lift CarMax stock to the resistance near $100 before the bears return with downside targets near $40 or maybe even lower. The following updated chart shows how the situation developed. The initial 3-wave recovery wasn't all of Wave B. Instead, it evolved into a bigger ABC zigzag correction with a triangle in Wave B marked ABCDE. The bulls fought a good fight, but the best they could achieve was $91.25 on December 19, 2024. Less than a year later now, CarMax barely held above the $30 mark last week after the company abruptly fired its CEO. Elliott Wave wise, Wave C looks like another impulse pattern in progress. A sequence of 4th and 5th waves could drag the stock further down, possibly below $20 a share. Once there, the risk-reward would be attractive enough for the bulls to emerge. The company still carries some $17 billion in net debt, but the operating cash flows have been improving. If CarMax can avoid bankruptcy, the stock could become a multi-bagger as the auto market cycle turns for the better in the years ahead.